Hello, it's Robert Miner with Dynamic Traders Group with their DT trade strategies for the week beginning October 18th, 2021. This is where we do about a 10-minute video for our Twitter and YouTube followers, give you a little taste about what we do for our DT Report subscribers, so we give them a much more comprehensive and educational video, actually a couple times a week on Wednesdays and Saturdays, and then we do updates every day after the market closes on the euro, the dollar, Bitcoin, Ethereum, the stock indexes, notes and bonds, crude, soybeans, what else? Oh, yeah, of course, gold, silver, and the GDX. All of those markets updated daily with the market position and potential trade strategies. So again, if you like what you hear in this video, check us out at dynamictraders.com. Let's get started. We'll do a review of a couple markets that we've looked at over the last week or two. And again, even if you don't trade the markets that we talk about, you can learn the trading strategies, the analysis strategies, the fib price and time, the Elliott wave, simple Elliott wave strategies that we use, and you can apply it to any market in any time frame, even if it's not a market that we talk about. Okay, let's get started. We talked about the position and potential trade strategy for notes and bonds last week. This is Notes Daily, and we talked about if bonds were to make a close over 131.15, more than likely a wave 3 and weekly low would be complete. Well, on Thursday, Notes indeed made that close above 131.15. Where did it close? One tick above 131.15. And when it made that close above it, the fast line of the momentum, daily momentum, was already overbought, so it wasn't a go long strategy, but it was a setup, a technical setup to develop a specific go long strategy. So the strategy is the next daily momentum bull reversal should complete a weekly low. Is that bull reversal going to be made with price below the October 11th low? It's actually possible with notes because we just reached the overbought zone, and the daily momentum should be sideways to down for 3 or 4 days. But it'll be a great setup on the next bull reversal. Let's take a quick look at bonds, because bonds more than likely will not make a new low. Bonds are in the same basic position, probable 1, 2, and 3, but bonds close much more strongly above the September 29th closing low, that wave 3 of 3, and then it followed through on the upside for a day or two. Bonds is also in a position to complete a daily high, but more than likely, bonds are going to make a corrective decline and not exceed this low. So, boy, it's a great setup for you to be prepared in the next 3 or 4 days after a minor correction here of 3 or 4 days to position long for notes or bonds, either one of the two. Let's just take a quick look at bonds weekly data. Unlike notes, bonds closed sharply higher this week. This is what we call a snapback reversal week. That's when the prior week opened on the high and closed in the lower 1/3 of the range, which it did. And then the week after that, the snapback reversal week, the snapback pattern, is when they open near the lower third, and close near the upper third. And bonds also made a dual look back bullish reversal on the weekly momentum. So again, probably have completed a weekly low. Great setup in a few days following the next daily momentum bull reversal. We talked about a probable setup in soybeans last week. Well, that setup has been made. This is weekly soybeans, and the last week's low tagged 100% alternate price projection of the wave A from the wave B high. So that's in an ideal position to complete a weekly low and an ABC correction. The very least a low that's going to last 2 or 3 weeks. It's also the 127% external retracement of the wave B. So that's pretty significant. Now, however, beans did not either make a bull reversal in the weekly momentums and did not make a higher weekly close. So we need some confirmation of that low. Here's the daily data for beans, and beans made a triple look back daily momentum bull reversal from the oversold zone, and that's a unique situation, and it's a pretty solid signal that that weekly low is complete. And then on Friday, we actually had the trigger. For those of us who like to buy bottoms and sell tops, if all the technical position is in place to make that reversal, this was the setup because it traded on Friday below Wednesday's high, and then, of course, actually ended up closing above that high. A really good reversal signal. For those of you who like to wait for some confirmation, which is probably most times the more practical and in the long run more profitable thing to do, is it'll take a daily close by November soybeans above 1235 to signal that the weekly low, or confirm, I should say, the weekly low is complete. So we're just in the very initial stages. We just made the signal on Friday, haven't made the confirmation, so you really ought to take a look at beans if they close above 1235. That could be a multi-week and maybe even multi-month go-long setup. Let's take a quick look at the SPX. This is the weekly data for the SPX. The key piece of information here is that the SPX made a dual look back weekly momentum bull reversal from the oversold zone the prior week, and then we had a good follow through this week with a strong week up closing near the high of the week. And because the weekly momentums are not well, they're just made their bull reversal, more than likely the SPX should be sideways to up for 2 or 3 more weeks with a potential for a new high. So let's take a look at the daily data, and this is pretty significant. The daily momentums are bullish. The fast line reached overbought. We should complete a daily high no later than Wednesday. The two key time factors, daily time factors we have are for Tuesday and Wednesday. Wednesday is an important one because it's the type of time factor that pinpoints when the maximum time should be for the next comparable daily high. So it's not a target, or it's not a forecast the high will be made Wednesday, just that Wednesday should be the latest day. And given that the fast line of the daily momentum's reached overbought, that itself indicates we're within 2 or 3 days of a daily high. So we have some significant information here on this close-only daily chart. Number one, probably the immediate maximum upside before we make that daily high is around 45.13. That's 162% alternate price projection of what I got labeled a wave 1 or A from the 2 or B low. And that would be the typical wave 3 target zone. Because the weekly momentums are dual look back bullish, more than likely that's a 1 and a 2. In the recent week or two in our reports, we've been focusing on this as a probable correction, not the early stages of an impulsive bear trend, but a correction. And primarily because of the pattern, and also it's this sloppy closing overlap pattern that drove the weekly momentums to oversold. So more than likely this is a completed correction, and this is a 1 and a 2 and a 3. So we should make a daily high by Wednesday at the latest, followed by 3 or 4 day corrective decline, and then a continuation of the weekly bull trend. So great setup in the days ahead following the next daily momentum bull reversal. Now that's probably at least 5 or 6 days away. We probably got another day or two anyway of net sideways to up, and then we'll have 3 or 4 days of more than likely at least of a corrective decline, and then a continuation of the bull trend. What would void that? You always have to identify what would void your probable outlook. Well, a close below this swing high close that I've got labeled a 1 or A, and that's a close below 43.9976, would void the continuation of the bull trend regardless of the bullish weekly momentums. That is a overlapping closing overlap signal that indicates this advance would be a correction and not an impulsive trend. So I'm not forecasting that's going to happen, but should it happen on the next decline following the next daily momentum bear reversal, then we got to completely reorient from the bull side to something else. So that's the kind of thing we follow up with every day with our DT reports. subscribers, which you might be interested in. You ought to check it out. Very minimal cost every 3 months for a DT report with daily updates, a couple of videos every week, and plus we do what we call the big picture reports. I just completed one on gold, silver, and the GDX early last week. The week before, big picture report on the intermediate and long-term position of euro, the dollar, Bitcoin, and Ethereum. So those reports themselves, I think, are worth the price of subscription. So if you want to keep up to date every day on all these other markets we follow, check out our DT reports. That's it for me for today. Take care. I probably, I won't be back with an update next Saturday, taking a week off. So I hope you use the information in the last couple of weeks' updates and this one we did today to take advantage and use that to develop very specific trade strategies. Take care. Stay healthy. Be back with you in a couple weeks. Robert Miner, over and out.